Good morning. This is Robert Kaars Sijpesteijn bringing you this morning's market update. Wall Street is on course for a record high, sparking a global rally in risk appetite after US jobs data suggested the world's biggest economy was improving at a pace that would still allow the Federal Reserve to keep borrowing costs low for longer. Helping underpin the bullish tone, which nevertheless sees government bond yields holding near record lows, is a more stable UK pound as fretting over Brexit abates. On Friday, the Wall Street added 225 points to close on 18,186. The US Tech 100 added 66 points, closing on 4,524.75, and the US 500 gained 38 points, closing on 2,128.18. Gold was set to record its longest winning streak in 2 years as analysts forecast further demand from investors seeking shelter from turbulent financial markets and an increasingly uncertain economic outlook. The yellow metal, which offers no yield, has been one of the year's best performing major commodities, rising almost 30% to $1,350 a troy ounce as negative interest rates and falling bond yields have increased the appeal of owning gold bars and coins. Demand has increased since the UK voted to leave the EU last month, with hedge funds and speculators placing a record bet on rising prices and investors pouring money into gold-backed exchange-traded funds. The precious metal gained 5 points on Friday to close on $1,366.60, with Brent crude, however, ending its downward week with a small uptick, gaining all of 9 cents to close on $46.59 a barrel. In Europe, the Bank of England is set to cut interest rates to new historic lows on Thursday in an attempt to ease the pain of a predicted Brexit-induced economic slowdown. The economic outlook has deteriorated and some monetary policy easing will probably be required over the summer, said Mark Carney, the Bank of England governor, at the end of June. Financial markets have already priced in a 75% chance of interest rates being cut from 0.5% to 0.25% this week, the first rate cut in more than 7 years. Rates are not expected to return to their current level for 5 years. Mr. Carney seems keen to take quick, decisive action, but by the time of their meeting on Wednesday, the MPC will have only limited information about what effect Brexit is having on the UK economy. Hard economic data, such as figures for retail sales, employment and industrial production, will not be available until September, and even survey evidence on business plans will not be published until August. For now, the MPC must rely on reports it receives from the bank's agents around the country, combined with other less reliable public information that has started to emerge. During the financial crisis in 2008, reports from the bank's regional agents were one of the earliest signs that the economy was entering recession. The MPC meeting minutes on Thursday may provide an indication of what message the bank is receiving. The UK 100 has continued its upward momentum, adding 54 points on Friday to end the week at 6,589.2. Meanwhile, the Germany 30 added 238 points to close on 9,639. In today's corporate news, the London Stock Exchange said it's evaluating Deutsche Boerse's proposal to lower the shareholders' acceptance threshold for a takeover. Royce is acquiring a 53.1% stake in Industria de Turbo Propulsors for €720 million to strengthen its position in civil aerospace. And Renew Infra Group has snapped up 51% of a solar project in the south of France. Today's economic data in focus at 8 o'clock in Italy, industrial output for May is released, whilst at 2 o'clock in the US, labour market conditions index for June is released, and at 11 o'clock in the UK, BRC retail sales monitor for June are released. That's all for this morning's market update. Thank you and goodbye.